Namaste, my dear friends. Continuation of composition scheme to conclude. This a very important threshold limit for a trader manufacturer other than restaurant service if they provide that service max is 10% of the aggregate turnover of the previous year or 5 lakh rupees, whichever is higher up to that only allowed. How, sir, we can able to understand this practically? I will give an example in this regard, you are able to understand. Here, I am going to bring to notice a simplified example, my dear. Look here, one example. Mrs. C and Company, trader, registered person under GST, located in Chennai. So, he's a trader. Now, assume a scenario. In the previous year, aggregate turnover rupees 140 lakh. Here, in the current year, if they wanted to choose composition scheme, current year composition scheme, eligible or not, for which they should pass the two tests here. Step 1, aggregate turnover. Aggregate turnover the previous year should be less than or equal to 150 lakhs, because in Tamil Nadu, Chennai means Tamil Nadu. For a trader, the threshold limit 150 lakhs. How much he achieved? 140 lakhs. Well within the particular 150 lakhs. Therefore, in the given case, answer is yes. Step 1, yes, satisfied. Step 2, they should not exceed the services other than restaurant, the limit. 10% on rupees 150 lakhs is 14 lakhs or rupees 5 lakhs, whichever is higher. Therefore, the maximum supply of service is 14 lakhs. Up to 14 lakhs in the current year, they can provide services being a trader. Then composition scheme is the current year eligible. If the CN company, if the CN company in the current year provides services more than the maximum limit other than restaurant, namely 14 lakhs, more than 14 lakhs of services, CN company, a trader provide the services more than 14 lakhs, then they are not eligible for composition scheme. With immediate effect, they should convert into normal scheme. They switch over into profit. So now please come back. We are referring what? We are referring the points relating to composition tax payer, namely manufacturer trader, can have value of services other than restaurant services 10% of the aggregate turnover of the previous year or rupees 5 lakhs, whichever is higher, up to which allowed to provide services in the current year. If goes beyond that, they are disqualified from composition. The meaning of it. But the turnover, what you refer here, does not include interest earned on deposit, loans or advances. Does not include interest on loans or advances. That means in the given case, the turnover, this 140 lakhs, should not include interest earned on deposit, loans, advances. If it is there, eliminate it. And balance turnover won't apply. 10% of the aggregate turnover or rupees 5 lakhs, whichever is there, up to that services can be rendered by a particular composition tax in the current year to retain composition scheme. Now come back. In the given case, furthermore, I'm presenting here example. One more example I'm giving, a simplified manner. If you look here, a manufacturer is a manufacturer has following turnover in the Tamil Nadu. Financial year 22-23 following turnover. Taxable goods for 40 lakhs. Exempted goods 30 lakhs. Taxable services 3 lakhs. Exempted services 2 lakhs. Interest earned on deposit, loans or advances. Here, interest on fixed deposit 3 lakhs. Total 90 lakhs. When you refer total 90 lakhs, my dear sir, we said aggregate turnover should not include interest earned on deposit, loans or advances. Should not include. Then the turnover be how much will come here? 75 lakhs. Correct? Yes or no? Tell me. Second, tell me. Hey, Mr. My dear friends. Correct? Yes, sir. 75 lakhs. Now, if it is 75 lakhs aggregate turnover, after eliminating interest earned on deposit, loans, advances, 75 lakhs the previous year, 2024. If so, on 75 lakhs, 10% is equal to how much? 7 lakh 50,000 or rupees 5 lakh. Whichever is higher. Which is higher? 7 lakh 50. Up to 7 lakh 50,000 worth of services in the current year that manufacturer can provide, which is other than restaurant service. Up to 7.5. In the case here, how much is providing services in case, how much provided already? How much put already? Refer here, 3 plus 2, namely what we can call taxable services 3 lakhs, exempted services 2 lakhs, total 5 lakhs. So not exceed 7.5 lakhs. Not only that, in the current year 23-24, ensure that should not go beyond 7 lakh 50,000 of services other than restaurant, because he is a manufacturer. For a manufacturer trader other than restaurant, there is a threshold limit to provide these services, namely 10% of the aggregate turnover or 5 lakhs, whichever is higher. Further referring to you, my dear friends. Sir, there is a concept here. We have a concept. When you refer to the composition scheme, the given case, for the purpose of computing aggregate, I'm referring point number 4. For the purpose of computing what? Aggregate turnover. Aggregate turnover for what purpose? Of a person for determining eligibility to opt composition scheme or not eligible to opt composition scheme is depends upon the aggregate turnover. One of the criteria should not exceed 1 crore 50 lakhs in the preceding financial year. For few states, 75 lakhs. For trader, manufacturer, restaurant. For other than the restaurant service provider, 50 lakhs. While determining that aggregate turnover, that aggregate turnover includes the value of supplies made by such person from the first day of April of a financial year up to the date when he becomes liable to registration, liable for registration. Very important point I'm here underlying. Shall include, aggregate turnover shall includes the turnover from 1st of April of a financial year up to the date when he becomes liable for registration under this act. That should be included. What is to be excluded? While computing the aggregate turnover for eligibility purpose to opt compensation or not, should excludes interest earned on deposit, loans, or advance. Sir, how we should understand this? I will give an example here. A classical example I'm bringing. Assume a scenario. In the given case, aggregate turnover shall exclude for the purpose of eligibility purpose as follows. In the given case, as follows. Look here. Assume Mr. C is a practicing chartered accountant. He started his profession from 1st April 2023. So the year in which he started the profession, obviously he is eligible for compensation scheme because his previous year is nothing, which is zero for compensation scheme current year. Opted compensation scheme, yes, in the year 23. When you refer his turnover, a practicing chartered accountant turnover, if you refer here, you come across from 1st April 2023 to June 2023, turnover is 20 lakhs. Till that time, not liable for registration. From 1st April till that time, not liable for registration. Or till the time liable for registration, as the case may be. That means from 1st April 2023 to 30th June 2023, Mr. Chartered Accountant is unregistered person, not required to register, therefore not required to pay GST turnover 20. Such a turnover from 1st April till the date liable for registration, because after crossing 20 lakhs, he has to go for registration. Being a supplier of service, turnover limit 20 lakhs to go for registration, except Manipur, Mizoram, Nagaland, Tripura. In the case of Mizoram, Manipur, Nagaland, Tripura, aggregate turnover should not exceed 10 lakhs for a supplier of service. For a supplier of service, other than the Manipur, Mizoram, Nagaland, Tripura, turnover limit is fixed how much? 20 lakhs for registration. So, for Mr. Chartered Accountant, turnover in the year incorporated from 1st April to liable for registration up to 30th June, not liable for registration, 20 lakhs. From 1st of July, he is liable for registration. So, this 20 lakhs from 1st April till the date not liable for registration is the aggregate turnover includes this 20 lakhs, but does not include interest and on deposit, loans, or advances. That means 60 lakhs minus 10 lakhs, balance is 50 lakhs. Therefore, as long as aggregate turnover not exceed 50 lakhs, eligible for composition scheme? Yes. This 50 lakhs includes 20 lakhs. Yes, includes 20 lakhs. Because from 1st April till the date liable for registration, that aggregate turnover should include into 50 lakhs. This is what they said here. Refer here. Aggregate turnover for eligibility purpose should include from 1st April of a financial year up to the date when he becomes liable for registration under this act, but excludes interest earned on deposit, loans, or advances. This is what I referred here in a simplified manner. Further, my defense, coming to this point, in our material I have this point number 5, also very important. For the purpose of determining tax payable by a person under this section, the expression turnover in state or turnover in union territory shall not include the value of following supplies, namely supplies from the first day of April of a financial year up to the date when his such person becomes liable for registration under this act, and also shall exclude interest earned on deposit notes advances. Then what do you mean this? Point number 5, focusing the attention on the part of the following. So, what is this point highlighting to us? For the purpose of determining what tax payable, that is important, by a composition taxpayer. If so, such a composition taxpayer, while paying the tax on the turnover, that turnover includes or excludes. That question arises. For the purpose of payment of tax, aggregate turnover excludes. Aggregate turnover excludes from 1st April till the date liable for registration. Meaning thereby, in the given case, you will understand, my dear friends, the point you understand here. Same, Mr. CA, start the process 1st of April 2023. If so, he has the following as follows. Turnover. In the earlier example, this turnover for eligibility purpose includes, means 150 lakhs or 75 lakhs or 50 lakhs. For the taxing purpose current year under composition scheme, this turnover from 1st April till the date liable for registration required to pay GST, required to pay GST. Why not required to pay GST? Not required for registration. Such a turnover should excludes from the aggregate turnover to tax under the composition scheme. If so, aggregate turnover 60 lakhs. 60 lakhs minus this 20 lakhs. Further, aggregate turnover excludes interest earned on deposit, loans, or advances. That also eliminate the 10 lakhs. Then you will get how much? You will get hardly 30 lakhs. Being a service provider on 30 lakhs, liable to pay CGST. What rate? 3% on 30 lakhs equal to how much comes in? Tell me quickly. On 30 lakhs, on 30 lakhs, 90,000. Huh? Yes. Again, SGST 3% on 30 lakhs, which is 90,000. Is the way in which you pay composition tax by a practice chartered accountant or a cost accountant or any other service provider after the composition scheme other than restaurant services. Is it clear now, my dear friends? Any difficulty? Any difficulty up to this? Clear? Good. Further refer to you, my dear friends. A trader who liable to pay tax, CGST 0.5%, HGST 0.5% on turnover. Only taxable turnover. Only taxable by a manufacturer, by a restaurant fellow, by a service provider. Manufacturer liable to pay 0.5% CGST, 0.5% on the total turnover, which includes taxable as well as exempted turnover. But that exempted turnover does not include interest earned on deposit, loans, or advances. Restaurant were liable to pay tax 2.5% CGST, 2.5% HGST on aggregate turnover, which includes taxable as well as exempted turnover, but does not include interest earned on deposit, loans, or advances. When you come to service provider, other than restaurant fellow, also liable to pay CGST 3%, HGST 3% on the total aggregate turnover, which includes taxable as well as exempted turnover, but does not include interest earned on deposit loan. These rates, examiner not going to provide the examination. He should recollect composition tax rates. He should recollect. Further referring to my friends from here, the points are as follows: being a manufacturer, being a trader, being a restaurant fellow, aggregate turnover should not exceed 1 crore 50 lakhs, 75 lakhs, or case of restaurant fellow also should not exceed 75 lakhs or 150 lakhs. Depends upon the state where the place of business. In the case of a service provider, other restaurant should not exceed the aggregate turnover in the financial year 50 lakhs. Now, how to compute aggregate turnover? If that comes into picture, aggregate turnover includes and excludes. So I will refer first aggregate turnover while computing 150 lakhs should excludes inward supplies on which the recipient is required to pay tax under reverse charge. That means I'm a C of Chennai. I have composition scheme. When I purchase the goods, unfortunate being a recipient, Mr. C, who is under composition scheme, liable to pay GST under RCM, reverse charge mechanism. Just Mr. C paid the GST and the RCM on his purchases, on his of services. It is not the turnover of Mr. C. So, for a composition taxpayer, see, while determining his aggregate turnover, you should not add the turnover on which Mr. C paid tax under RCM. Should not include, because the turnover of the supplier, not by recipient. If the recipient aggregate turnover, when you refer, should not include the turnover on which GST paid under RCM by recipient. Of course, aggregate turnover should exclude all taxes of GST, namely central tax, GST I, GST compensation as a whole. GST should not include in the aggregate turnover of 1 lakhs or 75 lakhs, or in the case of a service provider, other restaurant, tax. While determining it, you should not include the GST taxes. Of course, while determining aggregate turnover, we should not add interest earned on deposit, loans, advances. Interest earned on deposit, loans, advances neither addable in aggregate turnover for eligible purpose nor addable into aggregate turnover to taxing purpose. As long as this interest earned on deposit, what type of supply? Exempted supply of service. If so, that should be paid from the aggregate while determining eligibility or while paying the tax thereon. Remaining all include. So, further referring my dear friends from here, for the following products, if you manufactured, following products if you manufactured, I'm talking about only for manufacture. Manufacturer of ice cream, composition not eligible irrespective of his aggregate turnover. Pan masala manufacturer, aggregate turnover immaterial till aggregate pan masala not eligible for compositions. If you refer here, there is a case law in the case of Gulab Singh Chauhan case. Here, a shopkeeper who is making the pan bida in the form of the pan masala. Pan bida. Pan means betel, uh, betel, betel nuts, and mixing some ingredients, making it a bida, the manufacture. In the case of Gulab Singh Chauhan case, that shopkeeper, though maybe small trader, the manufacturing activity. Therefore, this activity of manufacture qualifies. A registered person making supplies of the following goods is also not eligible for composition scheme. In the case of Gulab Singh Chauhan case, GST AAR, Authority for Advanced Ruling, Madhya Pradesh, held that preparations of gutka in the pan masala is akin to manufacture on account of the process of preparation being that a mixing of different bought out ingredients and resultant product having a distinct name and use. Thus, preparation of gutka at the pawn shop for sale is covered under the so and so notification disqualify from composition because both pan masala and goods covered under the chapter 24 are listed as goods for which composition scheme cannot be obtained, meaning thereby manufacture of pan masala, manufacture of gutka, being a shopkeeper of small trader amounted to manufacture disqualified for composition scheme. Again, I'm telling you, ice cream manufacturers, pan masala, including gutka manufacturers, disqualified from composition scheme. Or if you are a manufacturer of tobacco substance like a cigarette, BD, like that, or manufacture of aerated water disqualified from composition scheme. Manufacture of tobacco substitutes disqualified from composition scheme. Manufacture of aerated water, the water contained with gas and producing in a particular bottle, it is manufacturer is not eligible. Composition scheme. Aerated water not eligible. Further, fly ash bricks, which is disqualified from composition scheme manufacturer. Manufacture of bricks of fossil meal, delicious earth also be not qualified from the composition scheme, irrespective of the turnover. The fly ash bricks or fossil mills or building bricks manufacturers or roofing tiles manufacturers disqualified from composition scheme, irrespective of their aggregate turnover in this. Further, my dear friends, bring into your notice very important content. What are the forms required to submit by a composition taxpayer returns under the GST? First and foremost, GST CMP 01, which is the scheme of GST with the time of introduction, namely 1st July 2017, appointed day. All registered person in indirect tax laws migrated. That time they can choose composition scheme if they are eligible for composition scheme by filing the forms GST CMP 02, intimation to opt composition scheme. Very important. CMP 02. CMP 02, very important. Intimation to opt composition scheme. For whom it is applicable means a registered person in GST paying normal rate of GST under normal scheme. Since his aggregate turnover not exceed the limit and he also satisfied other conditions, not dealing with the non-taxable supply, not supplying interstate outward supplies, and also he is a normal taxpayer, not supplying the goods or services to e-commerce operator, even though he supply the goods to e-commerce operator only in supply. If so, they want to choose the composition scheme, then they can choose next financial year by intimating to department before the commencement of the succeeding financial year. The scheme is applicable for the person who switch over into normal scheme with effect from 1st April of the succeeding financial year. That means in between of the financial year, you cannot enter into the composition scheme unless the law permits otherwise. Meaning thereby, a person who applying for the first time for the want of registration by filing the application for registration form GST REG01. That time in that form GST REG01 there is a column opting composition scheme. If you want to opt, that is sufficient is intimation to department. Such a intimation is given through form GST REG01 itself. That time they need not want to submit form GST. Then for whom GST CMP02, as I told you, it is only for a registered taxpayer who paying so far normal scheme, now want to switch over to composition scheme, intimate to department before the commencement of the succeeding financial year, and from 1st of April of the succeeding financial year, the scheme is eligible for you. Now, if I have two states, two places of business, one in Tamil Nadu, other one is in Andhra Pradesh. If there is a case, you want to intimate in two locations by filing the form GST to what was said by the CBIC. If you submit in one particular place of business, it is deemed to be submitted in another place of business. Submission of CMP01 intimation to opt composition scheme is sufficient to submit in one place of business in one state. Remaining other states they deemed to be submitted. Further, CMP03, when you go for composition scheme, you are not eligible to avail input tax credit. Therefore, before the 1st of April, what is your stock available in the organization as on 31st of March? The stock details should be submitted in the form GST CMP 3 to the Department of GST through network portal, and the same time you also be ensured that not to avail the cascade from the day one you opt the option scheme. Further, CMP04, CMP03 itself is a time limit to submit within 90 days from the date of exercising the option. Namely, from 1st of April, within 90 days, you have to submit your stock details. CMP3 time limit is 90 days, which is very important in come back. GST CMP04, when you talk about withdrawal of the composition scheme, many times in my study, in my lecture, I said, yes, you are qualified from composition scheme, then with immediate effect, you have to submit what we can say, go normal scheme by submission of CMP04, withdrawal of the composition scheme within 7 days from the date of event occurred. And also from that date onwards, you are eligible to avail input tax credit. File form ITC01 within 30 days from the date of event occurred. That means from the date you deferred from composition scheme, from the date we switch over from composition scheme to normal scheme, from that date with days, with form ITC1 to tax credit. And also intimation level of the composition scheme, form GST 4 within 7 days from the date of event occurred. Forms GST CMP05, show cause notice department will issue if they have any queries, you have to reply within 15 days. Form GST CMP06, CMP05, show cause notice. CMP06, reply to show cause notice within 15 days. CMP07, if you apply for the want of withdrawal of the composition, the department will pass the order. Or wanted to go for composition, then I am going for composition. Sir, please allow me to go for composition. Intimate department from J2, I submit department granting order, go for composition, the form G7 within 30 days. CMP08, a composition taxpayer required to pay the tax on quarterly by submission of GST CMP 08. Periodicity quarterly. Due date of filing the form GST CMP 08 is every month. I mean every quarter. Here quarter no, every quarter by the 18th of the following month from the end of the quarter. That means 18th day of the month succeeding such quarter. April, May, June quarter on or before 18th July. July, August, September quarter on or before 18th October. October, November, December. What on or before 18th January, January, March, year ending quarter, submit the form 08 on or before of April is a due date to submit the particular MP08 applicable composition tax. Such a composition tax will also be required to submit is annual return form GST R4. Form GST R4 is the annual return. Who required to submit? Composition taxpayer. What is the due date of submission of this particular GST R4 means by 30th April of the succeeding financial year. For the year 24-25, due date of filing the GST R4 by composition taxpayer for the year 24-25, for example, GST R4 due date is 30th April 25-26 financial year annual return therefore 30th April to what is containing GST for financial data, financial statement, balance sheet to be submit from GST for reconciliation submit along with the from GST annual return for a with this I can simplify manner to see that my professional RGS compositions group in corner section 10 section 10 subsection followed by with notifications compose. Thank you, my dear friend.